I'm Charlotte McLeod with the Investing News Network, and here today with me is Nick Hodge, founder of the Outsider Club. Thanks for joining me.
Thanks for having me again, Charlotte.
Of course. This is a broad question that I'm going to start off with, but we're 2 months from the end of the year. Where is the resource space at? How are we doing?
Oh, the resource space is quite tepid and boring at the present moment. We've seen a bit of merger and acquisition of bigger companies. Barrick and Randgold have merged here in the third quarter of 2018, but the equities across the board are quite depressed. I believe the GDX ETF, which represents precious metals mining companies, is down some 20-25% for the year, and similar with the uranium ETF. So it's boring. It's time to be buying these stocks, and it's probably only going to get worse because now we're in tax loss selling season, and so that's when people sell their losing positions, and there's so many losing positions currently in the mining space that I think you'll see a lot of selling between, call it now, Halloween 2018 and when we eat turkey later this year. And so cheap assets that are quality are only going to get cheaper, and that's the time that I would be looking to buy them.
Okay, so it's a little boring right now. I watched the panel you were on last night. You mentioned uranium is your favorite commodity right now. Is that one exciting?
Yeah, I think Louis James mentioned that uranium was exciting, and even Brian London might have echoed those sentiments as well. It's very quite exciting. I've been telling you for a year and a half that uranium prices are going to rise, and uranium prices have been starting to rise for a year and a half now. So I think maybe when we first started talking, they were sub $20 in the $18 to $20 a pound range. I got an email yesterday. They've now hit $29 a pound for uranium. Still nobody making money at that price, but the market is now starting to respond and say, hey, the price has got to rise to incentivize these producers to bring supply online. And there's a litany of reasons why the uranium price has begun to ascend like that. We can run through them quickly. Kazakhstan is a 40% producer of the global uranium supply. They are IPOing their company, and so they're going to be trading like a Western public company, and so they're going to have to act like one, and that means cleaning up their act, which drives up prices when you produce uranium, just not decimating the environment, but putting some Western type of controls on it. They don't want to flood the market with uranium as they have done in the past, because now they have shareholders to be accountable for. There's been the creation of 2 uranium funds in the past year, Uranium Royalty Corp and the Yellow Cake Fund, which are absorbing supply off the market. Cameco has shut down McArthur River, which is one of the largest and most economic uranium mines in the world, which should tell you something if one of the largest and highest margin uranium projects can't make it. And so in order to fill their contracts that they were fulfilling with McArthur River supply, they're buying uranium in the spot market, which is absorbing supply. Here in the United States specifically, 2 companies, UR Energy and Energy Fuels, have filed something called a Section 232 petition, which forces the Commerce Department to put together a report on whether or not basically U.S. uranium producers are getting the shaft, or it's a national security issue, and they could end up putting some kind of tariff on uranium imports or requiring that a certain percentage of uranium be produced in the United States. And then we have the very simple fact that 15 to 20% of global electricity production is from nuclear, and it's clean and it's baseload, and that simply can't go away because we don't have anything to replace it. So all those things tying together is what has led uranium to go up $10 here in the past year or so. But look, you ain't seen nothing yet because again, nobody's making money at that price. You still need $60, $65, $70 uranium to make money, and we're just not there yet.
And do you expect kind of a continued slow and steady rise in the price?
No, I think at some point it's going to be like getting hit by a freight train when the utilities come back into the market, a very rapid ascent. I was talking to some people who are much more entrenched in the uranium space than I am, that meet with utilities, that meet with uranium processing companies, and they say that the utilities, they really don't need to come back into the market yet, and that's sort of the last thing we're waiting on. And everybody keeps saying 2019, 2020, but for now it seems the utilities are content to buy in the spot market, and I think they'll buy in the spot market until they can't, and then you'll see some sort of dramatic rise in the uranium price. You're going to ask when, and I'm going to tell you I have no idea.
We'll keep waiting. We'll check back with you next time. We're here at the New Orleans Investment Conference, and gold is a big topic as well. What are your thoughts on the gold price right now and the activity we've seen?
Gold's been tough. It's been range bound. We get a little excited at 1220 or 1230, and then we play whack-a-mole back down to 1175 or 1180. Nothing's been really getting any traction, but similar to uranium, in fact, these majors, the Barricks and the Newmonts of the world, they haven't spent the past, call it since 2011, 2012, they really haven't done any capital investment, bringing new projects online or exploring for new projects. And so I think you could see that be a spark in the gold sector, merger and acquisitions, where these big companies simply have to buy out junior companies that have quality resources that can replenish their reserves. You also have, since 2008, 2009, the most unprecedented monetary experiment the human race has ever seen. We've printed a lot of money. We don't know how we're going to unwind that. I was talking to Rick Rule the other day. He said he saw a report that said total global debts, public, private, and sovereign, are over some $200 trillion. And, at some point there's going to have to be some unwinding of that. Again, you're going to ask when, and I'm going to tell you I don't know. But gold prices, I think, have to rise, just like uranium, to incent reserves to be replaced.
A lot of people here are talking about a big stock market crash and that kind of catastrophic thing. Do you think we're headed toward that?
I think this is the New Orleans Investment Conference, and it was founded on gold bugs and doom and gloom. Are equities overvalued? Yes. Have they been on a bull run since 2009, unlike we've ever seen? Yes. Could they continue to go higher? Absolutely. The Fed seems to relatively have things under control. The economy, in fact, is growing. The government tells us we're at full employment. The rest of the world is looking shaky. Look at Turkey, look at Venezuela, look at Greece, look at Italy. And so if you want to call the U.S. the cleanest dirty shirt, let's do that. But I think money continues to flow into U.S. equities as not only the country with the reserve currency, the world's reserve currency, but the country with the largest market cap companies and the most liquid stock market in the world.
How are gold stocks looking to you right now? You mentioned majors maybe going to make acquisitions. So should people be looking at the juniors?
I think gold stocks are cheap. One of the questions on the mining share panel here last night was, what segment of the resource market do you like? And I answered the question with brownfields. And brownfields are assets that have been in past production. And why I like those and why I think majors will like those going forward is because it's not raw exploration. It's not what you would call a greenfield, where you have to start from inception, raise a lot of money, hope you find something, drill in the ground, hope you can finance again to develop the project and permit it. These are projects that we already know work because they were past producing mines, and so they're either on care and maintenance or they need a little bit of drilling to upgrade a historic resource, but that already have infrastructure and mills built. And so I think those are the fastest back into production, and I think those are the sort of assets that majors are going to look for, and those are the type of stories that I'd be trying to identify as an investor.
As we finish up, are there any trends in the resource space that you think investors may be missing?
Any trends that investors may be missing? I don't think anyone's missing vanadium, but maybe they are. I think that there's just now starting to be a lot of headlines about it, even though the price has gone from, $10 a pound of V2O5 to, I think I saw $31 in Chinese pricing this week. I guess I would say not missing, but give maybe a warning. So look, this happens every couple of years. We saw graphite in 2012, and then there's always a flavor of the month, and lithium, and then cobalt. And so you have to just be careful of these Me Too companies that just add vanadium to the end of their name, which I've actually seen in the past couple of weeks, companies adding vanadium to the end of their name or shifting focus from a strategy that they weren't. Make sure the company that you're looking for is a vanadium company, has been trying to be a vanadium company, and is not just licking the latest flavor of lollipop.
I've heard some comments that nickel might be the next one coming up like that. What do you think?
I think nickel, zinc, and copper are all interesting. We call these like the stealth battery metals, right? Everyone talks about lithium and cobalt, but there's more copper in a battery than lithium. There's more nickel in a battery than lithium. And so, Rick Rule calls this the ascent of man theory. If a billion Indians who are just getting toilets for the very first time right now want mopeds and motorcycles and cars, then we have to continue to mine these minerals. If you want to upgrade your iPhone, then we have to continue to mine these metals and minerals, nickel, like you asked about, and zinc and copper as well. And so I think unless you think the human race is just going to go back to hunter-gathering and they don't want to acquire more stuff, then I think you have to invest in these base metals, yeah.
Okay, well, that's all from me. Thanks so much. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Nick Hodge.
Thanks, Charlotte.